with the overview of the e-invoicing initiative and what it means for your business. So, Mr. Killian, you have the next 15 minutes.
Thank you very much, Femi. And I will say good morning to all our participants who have taken the time to join us this morning for this conversation. And most especially thank our resource persons. One thing that I think Femi forgot to mention is that Mr. Soji Abolari, the CTO of West Metro, is somebody who, in addition, as well as Mr. Mike Adoga, are people who have been involved in the entire process of bringing the e-invoicing project to bear at FIRS. West Metro is one of the accredited resource providers for the implementation of e-invoicing. So these are people who are well grounded on the subject, and I'm sure there is no question you'll be asking today regarding how this is going to work that they will not be able to give you answers to if time permits. My work here is a very simple one, and I'm sure the slide is coming up just about now. It's mainly to introduce us to the concept of the invoicing itself, and well, not quite the concept, but just looking at the practicalities in terms of how we are all going to be impacted and what it means for our various businesses. So if we just move on to the first slide, like Femi has said, we as a country, Nigeria, are transitioning to a gradual digitalization of our tax system. This has happened over quite a period now. If you recall, until a few years ago, you would see you to get your tax clearance handwritten. You were filling your VAT forms on printed paper. Withholding tax returns, you will have to prepare and type them out and take them to the tax office, and they have to write credit notes, which will take forever to come. So it's been a gradual process. So the issue of invoicing is something that was definitely going to come with time. As you will see very briefly, it's something that it's an evolution that is going on across the world, especially across developing countries in Africa and in Asia. So Nigeria is certainly not, Nigeria's case is certainly not novel. We are simply following the trend from what we can see. So if we have to do a digital transformation with the tax system, e-invoicing is one that will naturally follow, mainly because of the many advantages that it has, especially for tax administration and tax compliance. So there has been an attempt, I think, in the Finance Act of 2020 or thereabout, by FIRS by the government to introduce electronic gathering of business data directly from taxpayers. First, they were restricted to using only their proprietary software, and I think subsequently in 2022 or thereabout, the Finance Act further amended that provision that allowed them to also use third-party software. And all of that was geared towards being able to assess transactions of companies, at least if not on a real-time basis, but at least on an online basis, to be able to capture data to enable them to verify the transactions of companies. And for so many of you who have been involved in tax audits too, you would have seen that there are instances where Sometimes the tax authority is bringing data to dispute some of your transactions, especially bank data. This is also part of the digital transformation of the tax administration process, and that has been on for a while. It has enabled FIRS to at least be able to have an idea of the financial transactions of companies that are registered with it. Just recently, we all are aware that the president has signed the various tax reform bills, which are now law, and which have been, whose implementation have been delayed until 1st of January 2026, even though the bills were signed and became law in June 2025. So it means that once these laws, the implementation of these laws commence, there will be, the statutory framework for implementing the e-invoicing thing will become more grounded, and all the penalties that are set out in those laws will surely begin to apply to all taxpayers in Nigeria with respect to e-invoicing. Moving on to the next slide, I just also want to bring us to, like I have mentioned earlier, just to mention that Nigeria is not alone. If you look at across Africa, the e-invoicing initiative is blowing like a wildfire. So many countries have adopted it, including our very close neighbors. As you can see, in Benin Republic, they are 5 years ahead. Ghana implemented last year. Countries as small as Niger have also implemented. I'm sure that would probably appear unbelievable that they went ahead of for Nigeria to do that. In East Africa, most of the countries in East Africa and Southern Africa have implemented one type of invoicing or the other. From what we have seen, quite a few of these countries started with the use of approved devices for the collection of payments by registered taxpayers, which enable the tax authority to track real-time payments that are collected by retailers and other businesses, especially in B2C transactions. Before implementing the invoicing thing, that itself is probably, you can say, is the lower version of invoicing. But I think Sodia and Mike Adoga will probably let us know the difference between that and what Nigeria is implementing. But just to let you know that this is not a novel at all. In Africa, a lot of countries have commenced the implementation of invoicing of one form or the other. Moving on, we also see that with the implementation of the Nigerian Tax Reform Act, especially the Nigerian Tax Administration Act, which is the law that is now governing tax administration in Nigeria across all the various tax authorities. There are now clear provisions that authorizes or that empowers the tax authority to deploy technology in the gathering of data from taxpayers. If you look at Section 71 of the NCA, you will see there that it is clearly stated that the tax authority can decide and is indeed empowered to deploy the use of technology for the gathering of data from taxpayers. And if you go to Section 109, 103, and 203, you will see that there are clear provisions for penalizing taxpayers who, one, deny access to the deployment of such technology by the tax authority, and that penalty is about ₦1 million for the first day of denying that access, and ₦10,000 for every day that denier persists until access is finally granted. You will also see that there is a penalty for bypassing the system. So if you bypass the system, the fiscalization system, and go ahead and issue invoices outside of the e-invoicing framework, a company will be penalized by, I think, ₦200,000 or so. It will also pay 100% of the tax that is attempted to avoid by that act, plus interest at the usual way of calculating interest by FIRS. We know that this can be very punitive. So it's really in the best interest of companies to begin to prepare to participate in this implementation ahead of time. We expect that there will be further guidelines issued in due course by FIRS on the various aspects of the NCA, including this e-invoicing thing. There have been publications, but we believe that there is still more information to provide to be able to guide taxpayers as we progress. Now, what is the FIRS invoicing system? I wouldn't want to delve into the technicalities because I know that our resource persons are trying to do that. So if we move to the next slide, it's just a digital platform for real-time invoice validation, which it simply means that it's a process that allows the tax authority on a real-time basis to validate every invoice that is issued by the company. By validation, it simply means it's able to identify and record or take a record of that invoice or for that transaction. It's supposed to be integrated with the business accounting systems where it exists, because we do know that some businesses do not have ERP systems, but I'm sure there are options to that, which Soji and Mike Aloga will probably provide clarification during their presentation. And it's supposed to cover business to business, business to government, and business to consumer transactions, all forms of invoices. We know that FIRS has started with businesses with a turnover of ₦5 billion, annual turnover of ₦5 billion. We don't know whether they have plans to downgrade this threshold to make it cover more businesses. That is less of a thing, but I think it's expected. So key compliance requirements are that companies are expected to integrate their systems with FIRS merchant buyer solution, which is I think it's probably what you may call the main system for the invoicing project itself. And so how this will be done will be explained to us. And like I said, it means that business to business and business to government invoices must first be cleared before they are issued. Simply meaning that if an invoice is issued by one party, it has to be on that platform, and then the other party may also have to clear it before it gets recognized on the system. We'll get to understand that also. And it's expected that business to consumer transactions must be reported within 24 hours, which means that they do not need clearing, but they also have to be online, but maybe not necessarily real time, because we are dealing with individuals. There may be there's no expectation that issuing invoices to individuals may require them to first of all validate those invoices on the e-invoicing platform themselves. but you should be able to report those transactions within 24 hours of them taking place. I expect this will relate mainly to the retail businesses and businesses that interface with the individual customers uh, directly. It will cover all transactions, including cross-border transactions, even though for now we know that FIRS has not yet mandated foreign companies to participate. But if you look at the NTA, you will see that use of technology is supposed to cover companies, non-resident companies that are doing electronic transactions to Nigerian customers are also supposed to be covered. That for those businesses, we know they have actually been implementing something before now, even before, to enable them to file their VAT returns online with FIRS seamlessly. I'm a bit fast. If you move to the next slide and the one after it. So what are the implications for businesses? I think this is not perfect. It means that businesses have to invest in technology. So definitely it's going to come at a cost for businesses. You must have a technology that meets the requirements of the e-invoicing platform of FIRS to be able to integrate. It means that we will have to train our people, just like we are doing now, on how to implement and how to manage and administer the invoicing process. It also means that businesses will have to redesign their entire transaction processes to be able to capture the impact or to be able to include the invoicing process itself in the entire business transaction chain. Since the process of issuing invoices, we now also have to take into consideration the reporting of those invoices to FIRS, especially for businesses that may not, how do I put it now, that may not have an ERP system that is directly integrated. So we also need to also look at the fact that there is a risk now for non-compliance. I just mentioned what the penalties are. Those could be huge for businesses depending on how much margins you already are making as a business from your transaction. It also means that tax audit for me should be easier if this works very well, because there will be one less or two less items to worry about, which mainly will be verifying what the revenue of the company is, and then also the issue of how much VAT is chargeable on that revenue and how much of it has been paid. So, but because of the impact of this, businesses must be very careful to ensure that their implementations are properly done and to ensure that wrong numbers are not reported on this platform. Definitely operational disruptions, because any implementation of a new system comes with its disruptions. This is certainly not going to be anything different. I noticed that the slides are not shared anymore. I hope we're not having challenges. Admin, can you still hear me, Femi?
We can hear you. It's coming up.
Okay, great. Yeah, the slides are back. Good. So moving on to the next is, let's move on to the next slide, please. Good. So, but positive for me really is that the audit readiness and VAT reporting will become much more seamless if this is properly implemented. But if it is wrongly implemented, which I fear could, which is a possibility really, not that I fear, but it's a possibility that some businesses may not implement properly, or that the system itself may require more expensive testing. But I believe that has been done because FIRS has been working on this for quite a while. But if you do not implement properly, it means that your tax audits for VAT especially, and even your income tax, because of the revenue that is reported for you, will be impacted. So companies must ensure that they engage the right people to help them with implementation, so that there are no errors in reporting their transactions. Yes, this means that the tax system is also aligning with the digital economy goals, where a lot of transactions are already done cashless. So this also goes to improve on that. And I think when this becomes very fully implemented, the issue of documentation to prove transactions between taxpayers and tax administrators will become a lot easier to deal with. To conclude, you will agree with me that it's quite a transformational shift that Nigeria is making with the e-invoicing. It's certainly going to come with a lot of compliance burden at the beginning, like any change management process will be. It will certainly come at an additional compliance cost, even financially for taxpayers, especially at this initial stage. So businesses must prepare. They must act quickly to avoid the penalties that will be imposed for non-compliance. Businesses must, at this point, also carry out their system readiness assessment and identify whether your current computers, ERP system or accounting system is capable of plugging into this new mandate by FIRS. Engage the right advisors to help you in doing this. Be ready to spend a little money to train your finance and IT teams, and even your procurement teams, because this is a two-way thing. It will also impact on your vendors as well as your customers with time. And just be ready to take this as a change that was expected to happen, which is certainly not avoidable. On this note, I want to thank you all for joining us today, and I believe that you will get invaluable knowledge from Soji and Mike as they make their ensuing presentation. Thank you very much. And of course, I'll be available to help in the Q&A at the end of it all. Thanks, Soji.
All right. Thank you, Mr. Killian, for setting the tone for today's conversation. I believe it's now quite clear that immediate compliance by all companies whose turnover is above 5 billion is required. So once again, thank you for your opening remarks. So now we move to the next speaker. Call on Mr. Mike Adoga to please go ahead to make your presentation. Thank you.
Thank you very much. Good morning, everyone, and welcome to this session. Thank you, Mr. Killian, for a great opener there. At least you've given most of the audience here basically a roundup or a summary of what they need to know. Can you put up my slides, please?
Coming up in a minute.
Okay. My name is Mike Adoga. I head the tax automation department in FIRS, and we're responsible for deploying the invoicing, tax administration systems, analytic solutions, and all essential technologies required for running the tax administration, the service. Go to the next slide, please. So what are we going to be discussing today? We'll look at e-invoicing, the thinking behind the project, the objective, what we seek to achieve by this deployment. And like Mr. Killian said, this is not a novel endeavor. It's something that has been around for some time. Other African countries have deployed this, all of them to different degrees of success and challenges. And things we've learned from all of that as well. We'll look at the regulations and guidelines, which Mr. Killian also did touch on, and the compliance requirements and deadlines. Next. Okay, so the e-invoicing project or the e-invoicing system as far as FIRS goes is the main deliverable there is that enables digital exchange of invoices as well as fiscalization, which is the reporting, the recording, the validation bits of digital invoices. So as far as FIRS goes, the name of our e-invoicing system in Nigeria is called the Merchant Buyer System. So in case you hear the name Merchant Buyer, it's not different from the e-invoicing system. It's just the name of the solution that we're using for electronic invoicing. We'll go through a couple of definitions of terms that you hear flying around as far as this project goes, and that would help you in dealing with the necessary interactions. So the invoicing system, the platform enables digital exchange of invoices as well as recording and validation for tax purposes. So this obviously simplifies the interactions between different taxpayers acting as merchants, sellers, or buyers. Keep going. So of course, I mean, it's pretty obvious that any automated system or digital system introduces some advantages over the manual counterparts. So before now, a lot of taxpayers had to rely heavily on manual invoicing. Just like I've seen one question in the chat where they said they just use Microsoft Word to prepare an invoice and all of that. Now, of course, the invoicing system is going to give one major advantage to FIRS, which is why FIRS is pushing for this. It's visibility. Now, if a taxpayer performs a taxable transaction, then the taxes due from that transaction should be accounted for and remitted accordingly. So if FIRS is part of the transaction from the get-go, then the process becomes easier and there's less back and forth during an audit. As a matter of fact, this will even reduce the need for audit because all the information is already with the tax authority and there won't be need for such extreme validation. So it helps us also align with global trade and data standards. It ensures real-time tax compliance and a host of advantages that this brings. So invoicing is it's not much of a nice to have anymore. It's pretty much the route which the world is going with the advancement of technology. It's something that at one point or the other would have to just have to have that in place. So it's the way to go. It's something Nigeria has adopted, FIRS is driving the process, but rest assured that this is a national project, and we have a steering committee of sister agencies like the CBN, Customs. We have NICDA as a regulator as well, and a host of other agencies that are working with us to ensure that this system works and meets the set objective for which it was put in place. Next slide. So, of course, I've talked about this, so you can move to the next slide. So, issues around fraud, human errors, delays, lack of compliance, back and forth. Some of the motivational factors for setting up the invoicing system. So, like I said, the merchant buyer solution is the name of the Nigeria e-invoicing system. So it's this digital platform that allows, for invoice generation, validation, and exchange between taxpayers for goods and services rendered. So in the course of taxpayers doing their business, what we're saying is that pass it through a secure channel, exchange this invoice in a digital format that is compliant with global standards, such that when it comes to establishing liabilities for taxable transactions, it's a straightforward and simple process. So be rest assured that when we say digital invoicing, we don't mean a PDF document. There's specific standards for what a digital invoice is, and all of that can actually be found on our website that we're going to share at the end of the presentation. Go ahead, please. So, from a regulatory perspective, obviously, Mr. Killian hinted on that earlier. It's with FIRS functions based on what is provided for in the law. We do not act outside of the law. And if you look at Section 158 of the Nigeria Tax Act, it clearly states that you shall implement such systems as deployed by the service. So, and in the Nigeria Tax Administration Act as well. So, it's clearly stated in the law that taxpayers are expected to connect to such technologies that FIRS deems necessary to deploy, for the purpose of getting, oversight and understanding or getting visibility into financial activities for the purpose of taxation. So, the definitions are there in the law. So I recommend that, we'll take some time off to look at some of these things and see how they affect us as taxpayers as well. Next slide. So the next question is, how does this thing work? Now, for those that are a little familiar with electronic invoicing systems and how they work, we've adopted what we call the 5-corner model, where at the corners, you have the different players within that ecosystem. You have the merchant or the supplier. You have what we call the access point provider. We have the regulator, which is FIRS, then the access point provider of the buyer, and then we have the buyer at the 5th corner. Now, before we get into how exactly it works, let us define who the players in this ecosystem are. So the merchant and the buyer are taxpayers. They are the ones doing the business. So they are exchanging goods and services, and then they are invoicing for such. So what we're saying is that if an invoice is issued, pass it through the system, and then let it be validated and cryptographically stamped such that it is validated and received by only the intended party. So there's that fiscalization element there. And there's that record keeping purpose that, it assists the taxpayer in keeping the record. So a system integrator is a service provider, a technology service provider that assists a taxpayer to configure their system such that it conforms with FIRS requirements. Now, what's an example of a system integrator? A Microsoft, for instance, an SAP, QuickBooks, Pitch3, companies that make this kind of software that taxpayers use for their bookkeeping, accounting, and ERP purposes. They are what we call system integrators, or even independent developers that have built such accounting systems or ERP systems. All they need to do is to look at the technical documentation that we've made available on our website and then configure such systems so that they are compliant with FIRS requirements. So that's the job of a system integrator, and it's typically something that is done one-off, right? So if, let's say, you're using QuickBooks, the QuickBooks vendor that supplied that to you will act as your system integrator and configure that QuickBooks to make sure it is able to send invoices for validation and stamping with FIRS. Then we have this other role of what we call an access point provider, and their job is to transmit these invoices across the ecosystem. Why an access point provider, you may ask? Now, we don't want to have that single point of failure centralized system such that everybody has to hit the FIRS system at the same time while doing their business. We realize that if we create some level of distribution to the thing, it will be easier, and there'll be less bottleneck. So the idea is that system access point providers serve as an intermediary between the FIRS system, the merchant buyer system, and the ERP systems or accounting systems that the taxpayers use. So they help move the invoices around and ensure the signing and the verification and all of that. So with all parties working together, it ensures that this process is smooth and it's secure. And we're adopting a real-time or near real-time reporting, such that if transactions can be done real-time based on maybe volume or some other factors, then it can be done like an end-of-day kind of situation, depending on the uniqueness of the particular environment or the sector. Like, we've been having engagements with different actors from different sectors, and we realize that the deployment cannot be a one size cap fits all. It's something that we tailor for the different industry, like those in the midstream oil and gas, those in the upstream, those in services, those in the telecoms, financial institutions, and all the different sectors have their peculiarities, which we have been engaging with them and taking into account, so that we ensure that the whole process is smooth. The idea is that do your business the way you've been doing it. However, make sure that transactions that you carry out are reported on this or reported through this platform via the service provider that you've chosen. Now, that's not a replacement for your tax filing. We're going to get to a point where the integration will be completed with all our systems, such that from the comfort of your ERP system, you'll be able to send in your tax filing and what have you. But we're not there yet. But that is the journey. That is the eventual destination that we're planning to get to. And it's generally termed Tax Administration 3.0, where taxpayer systems are at the center of all taxation activities. So introducing this system is basically the first step, or in moving us towards that set target. Next slide. So, because we have to adhere to certain global standards, we know that Nigeria, there'll be a lot of cross-border trade. So we don't want to implement something that is not interoperable. So we have standards that we've adopted using the Universal Business Language. We've also adopted the World Customs Organization Harmonized System Code to ensure that, for customs and trade purposes, cross-border, that goods, the naming for goods and services are properly captured. We've made sure that the system is fully compliant with the Nigeria Data Protection Act, messaging standard as far as ISO 20022 goes, and 27001, and then also using the legal entity identifier protocol as well to ensure that the system is in compliance with global standards. Go ahead. Next slide. So this gives you a flow of the rules in the invoicing system. So like I mentioned earlier, a taxpayer is a merchant, the taxpayer is the buyer. So your system integrator is responsible for connecting your ERP to the merchant buyer system. That is pretty much making sure it is compliant, right? And then as you issue invoices, as you go about your business, the system access point provider now transmits this invoice to ensure that there's a buffer between the FIRS system and the recipient or target taxpayer system to ensure that there is no downtime. Because even if FIRS was having a downtime, the system integrator or the access point provider will be able to still receive these invoices and transmit them as soon as connection is restored. So the job of the access point provider is validation and transmission of invoice data, while FIRS, does the final storing and enforcing of compliance. I don't know if you can see the images clearly, but that pretty much describes the flow of the invoicing system. So in a nutshell, your ERP system is configured by your system integrator to comply with FIRS expected standard. You go about your business normally, and then your system just goes ahead and transmits such invoices to the set recipient, while FIRS through your system, through your access point provider, sits in the middle for invoice validation and recording. Next slide. So what do you need to comply? As from the 1st of August, as communicated by FIRS, we're expecting large taxpayers, those with turnover of 5 billion and above, to start integrating with the system and start transmitting invoices that are compliant with the FIRS or the national e-invoicing regime. Now, why did we start with taxpayers of that threshold? Because we're aware that most of them use this standard invoicing solution, digital solutions for their accounting and their ERP purposes. So the integration process would be easier for them, right? So we're going to be rolling out in phases to different levels of taxpayers. So eventually, when we get to the informal sector, would have a different strategy for them as well. But we're starting with those that we know the systems that they use, and we're in touch with even the system integrators or the vendor or the OEMs of such systems like an SAP, Microsoft. FIRS also uses SAP. So we've been in touch in close conversations with all these OEMs, and we're even getting SAP to build a plugin that could be deployed in their marketplace for easy compliance, so that taxpayers that use SAP for their accounting purposes can easily just download this plugin, and they'll be able to comply with the necessary invoice exchange protocol. So, like I said earlier, the invoicing and fiscalization project covers B2B, B2G, and B2C transactions. So whether you're doing business to business, business to government, or business to customer, it's expected that all such invoices are reported. Of course, the business to business and business to government invoices have much more detail in them, and more than the business to customer versions that we call simplified tax invoice. Next slide. Sorry, this is the wrong slide. There's what's supposed to say there is there's a deadline. The deadline is going to be communicated shortly. We're going to, I actually was in a meeting about that this morning with management, and FIRS is going to be communicating the deadline for compliance for the large taxpayers, for those above that have a turnover of 5 billion and above. So please, it's not like there's no set deadline. We're going to be, we've communicated the date for commencement, and we shall be communicating the cutoff date shortly. And just like Mr. Killian said earlier on, the FIRS is going to be rolling out a number of guidelines and communications around the Tax Act so that taxpayers are guided, especially on issues like this fiscalization and compliance with the electronic invoicing. Next slide. Next slide, please.
Apologies, we're fixing that.
Okay, so if you're a large taxpayer and you have a turnover of 5 billion and above, what is expected of you right now is to go to e-invoice.firs.gov.ng. You log in. As a taxpayer, we expect that you would have an account on Tax Pro Max, log in with the same credentials, and click on Enable Me for e-invoicing. You complete the required information, because we'll ask you about, what accounting system you're using and stuff like that to help streamline the recommendation of, which system integrator you need to contact and things like that. And then you get a confirmation email, standard onboarding process. And then, of course, you start managing your entire invoicing process. Now, we understand that this is new and we're very much aware of, challenges around adopting new technology. So FIRS has a robust team on standby that is ready to assist all taxpayers on this journey. So, if to select a system integrator that will that will configure your system. If you need assistance with that, the team is available to give such advice, as well as selection of access point providers for a transmission of invoices. And so, like I said, it is mandatory for businesses to get onboarded and started with the integration process. And we have received a number of appeals from certain taxpayers, and the management is currently considering, the deadline that will be communicated. So, like I said, a public note is going to come out soon on when the deadline will be, after due consideration of the appeals that have been received from several taxpayers. So that's, in a nutshell, is the e-invoicing ecosystem. On the next slide, we do have a mobile app associated with it. And this is for the B2C component. It's called the MBS 360. So when a simplified tax invoice is issued, the customer can actually use this to verify, such invoices. And we'll be rolling this out when we're getting towards, the informal sector, where we want to use customers to encourage the use of issuing the issuing of these invoices, the simplified version, or receipts, if you may, such that such B2C transactions are also captured. So that, in a nutshell, is what we have. So for any questions and inquiries, you can go to the website e-invoice.firs.gov.ng. All the documentation is there for the different rules what is expected of a taxpayer, and what technology service providers like the system integrators, access point providers, what they're expected to do, how they can get onboarded as well, and all the information is there. And of course, you can always reach out to us on e-invoice at firs.gov.ng. That's the email address. So that's my presentation. Thank you.
Thank you, Mr. Doga. I think that was very, very much on point. Um, I also want to thank you for sharing your thoughts behind this initiative. I think one of the many questions that taxpayers have been asking is around the 1st of August date, and I think you have been able to clarify that, which is the fact that yes, the service is looking at has been listening to the appeal from different taxpayers, and very soon there will be a series of circulars that will communicate the cutoff date. But notwithstanding, I think it's also clear that taxpayers should just begin the process of integration. So thank you very much once again. So we go to the next speaker, Mr. Soji Abolari. Over to you, Soji.
Thank you very much. Good afternoon, ladies and gentlemen. Can we have the slides up, please? Okay, so while we wait for the slides, I'll introduce myself and our firm. My name is Soji Abolari from West Metro Limited. We are system integrators, access point provider, and consultants to FIRS on the subject matter. Can we have the slides, please? This is my slide. Sorry, is this my slide? Can you just change to the next page? Okay. So, as we may be aware, I'm just going to talk about Nigeria's evolving fiscal landscape to try and bring to bear how we have gotten here. I will start from the bottom since it's the oldest. As some of you may know, Lagos State is probably the first person to have fiscalization laws in Nigeria about 8 years ago for the hospitality sector. In that model, Lagos State recommended the use of hardware fiscal devices. So this, plugs a fiscal hardware device to your system, and that intercepts your transaction data and that reports it. Before what we know as e-invoicing today, we've had pilots in what was called VAT automation. And as part of those pilots, there were fiscalization models also deployed. The type 3 type of e-invoicing, virtual fiscal device installation. So places like ShopRite, a couple of restaurants, retail stores were part of that pilot, where you would go buy goods and your transactions are reported in real time. You had the FIRS logo on the receipt, etc. And then we also had the software fiscalization model, which under VAT automation was done in the hospitality sector, basically integrated point of sales and property management systems to FIRS and reported those transactions in real time. And then we have the entire full roadmap, which is what we call e-invoicing today. It starts from fiscalization as a concept, legal, technical concepts, and then translating to e-invoicing, which is an entire ecosystem. The model we have for e-invoicing, like Mike had shared earlier on, is a 5-corner model. And it's based on the PEPL standard. PEPL is the pan-European payments platform. So it's giving us, basically ensuring that invoices that we generate in Nigeria today are compliant across the world. So if you had a business transaction to do with somebody in Europe, if you generated that invoice today, you would be able to exchange that invoice with an access point, the person's access point in Europe, and vice versa. We're starting here so that we kind of tie what we've been doing to where we are going. We can go to the next slide, please. Now, it's important to understand the different types of categories of business transactions when we speak about e-invoicing, because the different types of transactions might determine the style and the type of model that you would adopt. So we have business-to-business transactions, we have business-to-customer transactions, we have government-to-business transactions, we have government-to-consumer transactions, and we have B2 business-to-government transactions. Next slide, please. I mean, Mike had pretty much gone through this. So the type 1, which is what the e-invoicing mentioned by our system. I think it's important to note that the different models with the deployment of e-invoicing today, the fiscalization models are aligned with the e-invoicing standard. So the data collected, the data sets, how it's transmitted, are all aligned with the e-invoicing UBL standard. Of course, I will not dwell on this since Mike has talked about the 5-corner model, which basically is a buyer and a customer. And of course, the buyer's access point, and then of course, supplier's access point as well. And of course, the fiscal authority. Essentially, you would raise an invoice, you send it to the person accepts it or rejects it. And of course, the invoice gets signed if it's accepted. And then, of course, the life cycle of the invoice continues, because an invoice being accepted doesn't necessarily translate into cash. So up until the day when the invoice is paid, the life cycle, payment cycle is tracked. Next slide, please. So type 2 software fiscalization, which is currently in operation in some hotels today, it's more of real-time reporting. So for this first type, we have multiple models. You have the real-time reporting, you have the near real-time reporting, and then of course you have aggregation / near real-time reporting, which is for large volume transactions, let's say banking sector. They would have to report such transactions in bulk as opposed to in real time, because of the sheer number of transactions that will be occurring. So on the type 2, which is strictly software fiscalization, real time, this model generally targets the retail sector, services sector. One of the key, the data set is pretty much the same. The standard is the same, XML/JSON format types. The fields are the same. But what you find is that the invoicing system is more encompassing. It's very, very, it's broader. It takes more details and information, whereas software fiscalization is concerned more with the transactional information. It's not necessarily interested in, what was sold. It's more interested in, was VAT collected? It wasn't collected at the point of sale. Can the customer be able to verify that the transaction was actually reported to FIRS in real time? This model speaks directly to closing what is known as the VAT gap in the retail sector in Nigeria. And of course, on the receipts, there are fiscal codes that allow anybody to be able to verify it. So you could have a smartphone, not have a smartphone. You should be able to send an SMS and then, use the codes. And of course, this can lead into things like VAT rewards, VAT lottery further down the line. You're just trying to spur people to ensure that the demand for fiscal receipts every single time they buy items in the retail space. Next slide, please. The virtual fiscal device, VATRAC, that was used in the retail sector. The beauty of this type of fiscalization is you get to have like desktop-based software that is installed on your system. So it doesn't really matter what type of software you are using. In that situation, once you're generating an invoice or a receipt, it is intercepted and reported to the tax authority, and the necessary information is also put, like the signatures and everything is put on the receipt. This model is quite interesting because as we all are today, we're all running and looking for SIs and integrators to integrate our ERP systems. But with that model in the retail sector, chances are you would find point of sale systems that have been built and not been maintained over a period of time, or just bought off the shelf a couple of years ago, where there was no regulation, fiscalization regulation in the country. In those situations, a virtual fiscal device comes in handy for the fiscal authority because you can continue to do your business. They will just install a generic software on your computer, and then that helps you to achieve your mandates. And then the next slide, please. So, Mike, I showed you how to get enabled. So step 1 to 4 and step 5 is start generating invoices. But before you start generating the invoices, we'll go through 5 steps: compliance and systems assessment, systems integration and customization, the access point integration and middleware enablement, training and change management, and go live and post deployment support. Next slide, please. So what does this really entail? For the compliance and systems assessment, this is where everybody's pretty much interested today. Everybody wants to know, how does this work? I've seen questions in the webinar chat. Is it going to be integrated to our ERP systems? The answer is yes. As a system integrator, it is our responsibility to ensure that whatever ERP system you're using is integrated to FIRS. So we basically use the SDKs or the APIs of these software that we build that integration for you. So before we start that, we have to do an assessment. We have to know where you are. We have to know the type of system you're using, the type of setup you have. You would agree with me that in some situations you would find, so we're focusing on accounts payable and accounts receivable, right? In some situations, you'll find that the system used for accounts receivable is different from the one that is used for accounts payable. Depends on the setup. So in a retail company, perhaps you definitely see points of sale at the different branches of the businesses across the country. But you'll see an accounting software and ERP in the headquarters used to manage vendor management and other type of things. So depending on the setup you have, if you as a bank, definitely going to have multiple revenue recognition systems, we'll need to identify those systems and then design the best way to get you in compliance. In these situations, it is possible to do single integrations. If you have 3 accounting softwares or 1 accounting, 1 ERP, and 1 point of sale, and maybe a property management system, we can easily build or deploy the integrations relevant to each of the 4 systems. Or perhaps we will build a middleware which will bring the data from these 4 systems into 1 application. And from there, we will transmit those invoice data to FIRS. So our approach to this assessment is going to be on a case by case basis. Well, this is generally the first step. The second step is going to be the system integration and customization. So what we are doing now is ensuring that the mandatory fields as per the e-invoicing standard is present. So there's mandatory fields and the optional fields. In the situation where, the mandatory fields is really the transactional information. Every transaction must have a tax-based amount. It must have the tax amount, etc. And we just ensure that these fields are present, and where there's need for extra information, or maybe, for example, on the endpoints, we have things like team lookup. So as we're doing this integration and customization, we would integrate you as well to FIS team validation, such that if you had a customer today, you don't necessarily need to go and start manually entering their phone number. Since your ERP is connected, we could do that integration that allows you to just put the TIN or RC number, hit the endpoints, and then we respond with the registered business name of that company. Things like exempt or zero-rated transactions. So in terms of integration to HSN codes, we have to talk about standardization in Nigeria. In my own system, I decided to call it Coke. In your own, you decide to call it Coca-Cola. But the HSN codes will determine if this is a beverage, what type of beverage it is. And then that also determines how it is treated in terms of value-added tax and whatnot. Apart from that, we would also be able to, in the future, I'm happy that the director is here. One of the things we would always be asking ourselves about is, how do I determine who is exempted from this? It's very possible that a diplomat comes into your establishment, or an NGO sends you an invoice or provides you a service, and they say, I'm not supposed to pay tax because this is my status. You don't have to take their word for it. I'm sure in the future, the TIN endpoint will be able to validate that particular taxpayer and give you the advice whether or not this person is exempted. Today, we kind of program it manually, but I expect that in the short term to medium term, we will be able to have such a service and advise such. And of course, we do the testing we generate the invoice itself, make sure it's in compliance. For us as West Metro, we kind of look at all the potential tax types that can come up and ensure that by the time you're done with your integration, you will no longer need to have any need for manual intervention again. So your VAT, your withholding tax reports, everything will be reported by the end of that integration. Of course, we'll do the testing. We will check out for errors. During these integrations, it's definitely not one-way traffic. We'll have to ensure that the data that is being transmitted, even the data on the invoice, even if it looks correct, we still need to validate that the data is also being transmitted correctly and also being received by the service correctly as well. Of course, we do data compliance and ensure that there's an audit trail for all transactions. So next stage, please. Next slide. The next phase will be the access point integration and middleware enablement. As you are aware now, the role of the access point is simply to transmit invoices. There's definitely other value-added services. But again, in situations where you have unique requirements, your access point that you will need, customize the endpoints that you need to ensure that you can also report your transactions. So if you had a very unique business, for example, let's say an e-commerce company that has B2B to X, and you need to transmit these invoices in a certain format to take consideration that it's not just to the buyer and it's not just the platform owner and the buyer and the seller, in that type of situation. So as access point provider, in that situation, we can create that custom endpoint that would suit your own unique use case. Again, the invoice platform already gives, I think, about 90-something fields which can be sent to FIRS. And, as the case may be, we will sit down, review, and then advise. We set up the connectivity and authentication between the client and FIRS, and then, of course, we validate the encryption, the configuration and the encryption and validation logic. So which ensure that your invoices are transmitted. They are transmitted in a secure fashion, and then they are also decrypted on the other side. Ensure data is the data is complete, is not tampered with, or is not corrupted in transit. And then, of course, the first stage is training and change management. The training, this is a training session, albeit free, but it is a training session because we are sharing knowledge. But as the case may be, internal processes might need to be changed in different organizations. How you treat your invoices. We have the issue of revenue recognition. A better question will come up. How do you treat partial payments? How do you cancel? How do you update your invoice? How do you ensure? What do you do if the third party does not, accept the invoice or doesn't have technology enabled for e-invoicing, perhaps? So in the training and change management session, it will be very, very hands-on with your financial staff, your technical staff that will provide the service for you and the support. And then, of course, for management as well, because there is no way you would be able to change this type of processes without taking your management along. So the training and change management is a very critical phase after the end of all the technical parts, and then that drives and increases adoption. Next slide, please. Okay, so we can just skip. These are just integrations we've done in the past. Type 2 fiscalization softwares that have been integrated by West Metro, which are currently operational. So you have businesses in Nigeria. These businesses on the right are all currently reporting transactions through the Type 2 fiscalization. And what is quite interesting is, when we did Type 2 fiscalization in the hospitality sector, there was no consideration for the B2B aspect. We're more concerned with output tax. And of course, in these people that have already completed these integrations, is now left to us to go back to them and then ensure that we complete the B2C aspect. So I'll give a typical example. In the hospitality sector, you would most likely find property management systems which manage your check-in and check-out, and ultimately manage the life cycle of the accounts receivable for the organization. You will find a point of sale device in the food and beverage section, which is definitely a different software. Most times the two of them are integrated because you could go and have a mail and say, post it to my room. How the revenue is recognized, when the revenue is recognized, one person comes into the restaurant and eats and pays cash. The transaction is reported to FIRS then because revenue has been recognized. The other person comes and eats and says, post it to my room, I'll pay when I check out. So the factors, how that interacts with the system is part of what we are sitting down and doing as SIs. And of course, a vendor comes to supply the hotel to say, oh, I brought 100 cartons of champagne and some rice and some potatoes and different things. How does the hotel treat that? The point of sale is not going to be able to pay the vendor. The property management is not designed for that function. So you would find that a typical hotel would have these two systems and they have a third accounting software, which is now used to manage the entire life cycle. So you'll see how in one situation, you would have an e-invoicing integration. Then because of the specifics of their industry, there might now be specific requirements for fiscalization to say, oh, this industry might be high risk. I would want you to report these transactions in this certain format. Next slide, please. Can we go to the next slide? That's not like, can you go back one step, please? Okay. So basically, the next slide will have discussed our approach, the methodology, and then the scope of the services. We've already discussed what the system integrator does. Does system design and integration, connects the taxpayers, ARP, and point of sale system to FIRS using the approved APIs and middleware solutions. System does security and compliance, does testing and certification, and of course deploys the solution for the taxpayer. The access point provider will then ensure that such an invoice that has been is now transmitted to the buyer's access point. And of course, if there's any exchange updates of invoicing, etc., that is done over both access points. Now, we'll ask ourselves some questions. What does this mean? What does it mean when I transmit an invoice? Just very, very quick questions. What happens when you want to update an invoice? What happens when you cancel an invoice? Most of the time, your ERP takes care of this. These integrations are not supposed to change your internal processes, albeit some processes will be updated. For example, when you prepare an invoice, for example, I always tell people in the past, it's easy for you to generate an invoice of 100 million and then expect that the VAT, put the VAT of 7.5 million there. But when you get paid, you would get paid 102 million 750, right? Why is that? Because whoever it is you're paying is also obligated to do withholding tax. It's going to be withhold tax. And by the time you recognize the revenue on that invoice, you would have a leftover because now your invoice was actually 107, but you received 102, which means 95 million was actually paid to you. 7.5 million was paid to you was paid to FIRS through you, which you must remit. And then the other person held 5%. In this situation, with e-invoicing, the two of you don't need to go and upload any type of withholding tax credit notes anymore because in that invoice, you just need to factor it. As an accountant, you know that if that invoice is not, if you don't zero out the transaction, the invoice will remain open. So chances are you do a manual ledger settlement to account for the 5 million, the 5 million naira variance in there. if you change your configuration, and this is where the training and the change management comes into play, by including a withholding tax amount on your invoice, then you would be able to have a zero invoice at the end of that transaction. Other things that come up is, when do you send an invoice for signing? It depends on how you want to run your business. So in the ERP space, at least the way we configure it, we even give options to allow you even change your mind. The Finance Act has allowed for cash or accrual recognition of VAT, which means that regardless of if you have not received the revenue, then you don't need to hold the liability in that period. So questions come, oh, I'm expecting a payment in 90 days. I've generated the invoice. If the invoice is reported to FIRS in this month as we are speaking, then it means that the liability for the VAT will be due by the 21st of next month, right? And is that what you want? I mean, it depends on how you want to run your business. If you want to recognize your revenue on an accrual basis, then you can set your ERP to do that. A lot of hotels do it. At the close of business, 1 a.m., end of day, they've recognized that revenue for the day and they've reported the transactions to the service. And then, of course, they can recover their funds later. For us, when we design and we do system integration, we give you the option to be able to even determine which of these you want to do on as you go. So an invoice by invoice basis, you can decide that, oh, this invoice is a cash invoice, the fiscal position is the cash fiscal position, or it's an accrual fiscal position. And that just gives you the level of control. So you are no longer, you're not worried about you're not worried about having liabilities before receiving payments, or if the transaction goes wrong and you don't receive anything at all, you decide that you want to cancel the invoice. The moment you cancel the invoice on your ERP system, it's also reported to the tax authority that the invoice has been canceled. And if you receive a partial payment on the invoice, you can report to the tax authority that, yes, I've received 50 million inside the 100 million this man is owing me. And as such, you report the tax elements, I mean, the percentage of the tax elements in that transaction as such. So as your system integrators, and it's very important your system integrators understand these models. I mean, it's up to you to determine them, but ensuring that it's also implemented in your ERP or your accounting solution makes your life way more easy. So we had talked about how long it is before you report an invoice, what happens if you want to cancel it. Traditionally, once invoices are paid for, I'm not very sure if the service is saved 24 or 48 hours, but this is a timeline in which standardly you have 48 hours around the world to report a transaction, especially B2C transactions, because a B2C transaction is one person has a tax ID, the other person doesn't have a tax ID. If you sell to him, even if you're offline, it's now your responsibility to ensure that you get internet within 48 hours to ensure that those invoices are transmitted to the service. Again, the regulations that will come out by FIRS would also definitely deep dive into this particular subject matters, how long you have to report an invoice, how long you have to cancel an invoice after generating it. Now, one of the critical things that we would also find is the linkage to HS codes. So today, as I mentioned earlier on, we have some lack of standardizations in product management. So I'm issuing an invoice today, I can decide to put Coke, and the next person puts Coca-Cola, and the next person says, Fanta or soft drinks or something. With the HSN codes, there's standardization. We will integrate that into your system as well. So as you're creating your products, or you need global product standardization integration, GSI, we can do that as well. So it's a very good time as a business to review what it is that you are doing that was not very, very standard, and then try and standardize it as well. So wherever it is, if it's TIN that you need data from, let's not try and put in manually. Let's just fetch it from the endpoint at FIRS. Everybody has a TIN. We pull it in. If it's the product name, because when you configure the product master data is where you put the taxes. So when you're configuring product management, when you're configuring the product, you are saying, oh, water is not vatable by Nigerian law. So when you're configuring that product, you have put the HSN code tied to water. And then, of course, that said, oh, yes, this is not vatable. Pampers or Cerelac, these are baby products. they are not vatable. As you're configuring it into your system, you're also validating with the HSN codes, and then you're saying, okay, yes, this is not valid, it's not vatable. And then I had mentioned NGO zero rated. How do you even know these individuals are who they claim to are? It's not possible that every single foreign-looking person that comes and says, oh, yes, I'm a diplomat. How do we verify that you're a diplomat? So it's up to the service to extend those endpoints that will allow you to be able to validate those special conditions that allow a person to claim not to be vatable. And I mean, that's pretty much it. So in quick summary, we've learned today what the role of the different types of fiscalization and e-invoicing models that we have today. Nigeria is operating the five-corner model, and we've had different models of fiscalization, which as we continue to get to other sectors, we will find very unique situations where you might have to use multiple types of fiscalization. And I'll give you an example. Let's assume an eatery that has over 40 branches across the country. It's very possible that in the Lagos office or the Lagos branches, they are using easy points of sale. In Ibadan, they're using Odoo. And if you get to Abuja, they're using QuickBooks. So in these situations, you can already tell very quickly that you're going to have multiple types of integrations in those systems. So we sit down with you, we analyze and recommend. I mean, you don't have to go and buy a new software. That's the first thing. And if the softwares are not even upgradable or we are not able to integrate it to the e-invoicing system, then we fall back to the virtual fiscal device. But one way or the other, no matter what type of system you are using, and of course, even if you don't want to use any system at all, we have the options of generating invoice. So we are creating solutions vendor that allows you to be able to subscribe and generate electronic invoices. So you don't have a software today. I believe FIRS as well has an invoice generating portal of some sort. I mean, it depends. The excuse should not be that you don't have the technology anymore, because by the time you look around in the ecosystem, you would find 1, 2, or 3 parties that are creating solutions to allow you to be able to generate invoices quickly and then exchange and accept them. Thank you very much. If you have any questions, I'm happy to jump into it.
Thank you very much, Soji. I think that was very, very informative. And I believe that the participants too will agree that the presentation and indeed the session so far has been very, very informative. But just before we go into the Q&A session, let me quickly also mention that for those who haven't registered or yet to onboard onto the e-invoice platform, we encourage them to do that at least before proceeding to the integration phase. All right. So we move quickly to the Q&A session to save time, and I'll be reading out the questions and expect our resource persons to answer some of these questions. The first question I have here is from Adebowale. It says, good morning. What is the process for dollarized transaction in relation to recognition and remittance? I don't know if Mr. Adoga would like to take that.
Okay, so one of the things that we've come to realize in this rollout is that we're not doing a big bang approach, right? We're taking things in stages. So you can focus on your internal, even though we have a provision for that. When you say dollarize, I want to assume that it's cross-border trade, right? Now, focus on your in-country transactions. Just get started with those. And obviously, for invoice exchange to happen on this platform, both parties have to be on the invoicing ecosystem. So focus on those, and then while we get across to the transactions that fall outside those categories.
Thank you very much. I believe that answers that.
So, do you wanted to add something to that?
Yes. So, as a system integrator, once your ERP would recognize multiple revenue types, multiple currencies, regardless of the currency in which you want to generate an invoice, the currency type, the endpoint is able to accept currency type as well. So that will be transmitted. So if it's a dollar invoice, it's reported as a dollar transaction. So it's at the system configuration level that that will be addressed. It's up to FIRS to determine how they want to collect.
Yeah, I think the important thing to note here is that this is not meant to change how you do your business or alter your internal business processes. We're just saying make a modification to your accounting system and then go ahead with your normal business process. The transactions will be reported to FIRS through the ecosystem, and you go ahead and fulfill your normal tax obligations and file your taxes as usual. As we make modifications to the filing process, those will be communicated. But for now, we're interested in reporting the transactions.
All right, thank you. Okay, so because we have quite a number of questions, we would just take a maximum of 2 minutes to just respond to the question. So I have another question here from Titsi Layo Balogun. For companies in highly regulated industries like the oil and gas, telecoms, and so on, what customization exists in e-invoicing? Are the percentages and price determined using industry codes? How does it deal with transfer pricing for multinationals?
Again, these are industry specifics, right? I did mention the World Customs Organization's code compliance within the ecosystem. So that, yes, is taken into account. Transfer pricing doesn't really play a role here because you're reporting transactions. You're not filing your returns, right, on this invoicing platform. So go ahead, business as usual, what you're doing now. Once your system is configured to report such transactions to us, we will get the data. We know how to crunch the data and make use of it. But you're still going to do your normal transfer pricing filing as well as your regular income filing. So reporting, configuring, or rather getting onboarded on the invoicing system doesn't change your filing or your internal accounting processes.
All right. Okay, they want to know what happens when a vendor's invoice is disputed by a buyer.
The same thing that happens when you do it. What happens today when you do it manually? If an invoice can have several status, whether it has been fulfilled, whether it has been paid, or whether it's been disputed, right? Reporting a transaction, an invoice on the invoicing platform does not automatically mean an established tax liability. So we understand that all these things happen and the system has been developed to accommodate all those kinds of things. So just disputing it doesn't mean that there's now a revenue that is automatically insisted upon in your books.
All right, thank you. Okay, good morning. Do you have any UAT system to test during integration?
Yes, we do. If you get, once you get onboarded, you go to e-invoice.firs.gov.ng, you click on enable me for invoicing and all, fill that information. From your confirmation mail, you get the links to the sandbox environment, the FIRS team details and everything you need to, comply with this requirement.
Okay. Next, we also have estimated billing, which customers dispute and can be granted adjustment. This is because of metering gap. I think this one should be from those in the power sector. You want to respond to that?
The same thing. You have provisions for accounting for your you practice, you keep those records, right? You do that normally in your day-to-day now. FIRS are aware of all these unique situations in the different sectors. So yes, there's provision for that.
Okay, sir. I have this question from Olumuyiwa Debayo. He said, could FIRS allow integration through a middleware data dump repository instead of a direct ERP connection? This approach would preserve data integrity, mitigate potential compatibility issues between the ERP and the FIRS interface. I don't know if
Before I allow Soji throw more light on that, I think whoever asked that question is already thinking like a system integrator or an access point provider. I think there's an opportunity for you in that space. So the answer is yes, you can actually do that. We allow the SIs and access point providers to innovate in that space. However, it's most convenient for the taxpayer. As far as the information gets to FIRS in the format we want it, we're fine with that. Soji, you might want to add to that.
Yes, I mean, just to add to what Mike said, in as much as the transactions are not tampered with, so to say, ideally, the ideal thing is that your system should report directly. These are the fiscal rules. If you have an invoice 001, the next invoice should be 00304, and like that's special. So if you look at how the IRN is generated, in as much as that transaction, you can generate the IRN, whether you're using a middleware at the transaction. IRN is also time sensitive. So once that is done, when you want to report it to FIRS, can be near real time. It can be in the future. You can take a lot of transactions together, bulk them, but you will need to pay that IRN at the time of transaction. If not, try to do it. That kind of what we're trying to achieve.
Thank you. I think the first one here, Soji is already making an attempt to respond to that from Sulaiman Quadri. Next, from Anonymous, how does IFRS define turnover in this context? I work in a holding company that earns dividend from subsidiary as a form of revenue. And I want to confirm dividend is not included in the turnover in this context. Mr. Mike?
As it's gross turnover, right? Before
Yes,
you determine your profit and everything. Once it's an income, once it comes in, right, as part of your turnover, that's the threshold.
Okay. All right. Jimo says there are a lot of peculiarities with the electricity sector. How would this be affected for billing? Oh, I can't see that question again. Okay, let me move to the next one. How about companies above the 5 billion threshold and their accounting system is unable to integrate with the FIRS invoicing system? How would that be reconciled?
I'm sure there's no accounting system today that cannot be integrated with ours. And to take the burden away from FIRS or a single point and create a bottleneck, that's why we created this ecosystem of system integrators and access point providers. Reach out to the FIRS team and let us know which accounting software or ERP you're using, and we'll find a solution for you and link you up with the necessary system integrator that would make your system compliant.
Thank you. I also have another one here from sorry, questions are just coming in. Okay, I have one here from Leslie. At the time of enabling our entity for e-invoicing, the nature of our industry was not available in the drop-down menu. Should this be a point of concern, considering that we operate within the renewable energy sector and sell products under a product financing model?
Okay, what we use the ISIC revision forecast classification for businesses. So if you don't, what you want to do is search for the classification of your business under the ISIC revision 4 and then select the category that you belong to based on the ISIC revision 4 classification.
Right. Good morning, sir. That's from Ismail. What mechanism or data analytics capabilities does the FIRS currently have in place to identify taxpayers who are actively conducting business transactions but are failing to issue invoices through the approved e-invoice platform? And how is non-compliance with this requirement being systematically detected and addressed?
So we have a number of initiatives in place for that. As you're aware, we get statutory information sent by all financial institutions as contained in their operational guidelines and what have you. And we also have additional systems in place that monitor track transactions both at the back end and all of that. So we're well equipped to check for any avoidance in this area.
Okay. Yeah, during the validation of invoices, will the time frame not affect the calculations and remittances of withholding tax, which definitely has a timeline for filing?
So what we've said is the reporting of invoices on this platform is not your filing of your tax returns, right? So you would work. So let's look at the peculiarity of your own sector when you reach out to the team, and then we'll advise you on how best to go about it.
All right. Let me see, are there any other ones? Okay. Hi, this one is from Stephanie. Quick question. Why do I need to download an app to view the QR code? Why can't I just use a normal QR code or scanner, QR code scanner?
The thinking behind that is that we might introduce a VAT lottery kind of scheme, and downloading that app activates you as a taxpayer with your tax ID and all of that. So you can use that to gather points. So if you're an active customer that collects and keeps all their receipts, at some point you might be able to use that to win some kind of prize or something. If you do that with your normal camera, obviously that functionality won't be there. So that's one of the thinking behind the mobile app.
Okay, thank you for that. Millicent is asking, who bears the cost of the integration? If it's the company, okay, I can't. Okay, who bears the cost of the integration? If it is the company, what has been put in place to help the company pay those bills?
So if you look at the Tax Act, Nigeria Tax Act, and the Tax Administration Act, the threshold of what has been defined as a small company has increased from 25 million to 50 million. And there are a lot of incentives within the Tax Act that make life easier for the low income end of the spectrum, even with regards to personal income. So yes, it's a holistic approach in as much as the law has now made fiscalization compulsory, that is reporting of transaction. It has also made provisions for, you know, the lower income earning end of the spectrum to not have so much tax burden. So it's actually balanced out, right? So the cost for the system integrator it's a cost of compliance now, which is what is required by law, and it's not something that Nigeria is doing alone. It's a global thing. So yes, that cost will be borne by the taxpayer. However, for the day-to-day transmission of the invoices, is something we're still working out internally at FIRS, and we'll communicate that decision shortly.
This person wants to know the critical items that could give rise to non-validation of invoices.
Critical items, if I understand that question, is saying the invoice couldn't be validated because they couldn't get it across or something like that.
Yeah.
But there's redundancy. You have a number of access point providers that will be published. So if you have your access point provider, if they are not able to validate your invoice, you can simply just choose another one.
Okay. Does the e-invoice cover all forms of invoice all forms of invoice for all businesses operating in Nigeria? Are there exclusions beside entities making a turnover of less than 5 billion?
So we're starting with those that are making 5 billion and above, not less than, right? We will be we'll be rolling this thing out in phases. And like I said, when I was presenting, the reason why we're starting with those 5 billion and above is because we know the kind of systems that they use. We know their accounting systems, their ERP systems. So we know their integrations won't be a challenge. So we want to get those ones out of the way, and then we roll out to other, excuse me, other taxpayer groups, right? So we're starting with those 5 billion, but 5 billion and above, but we'll eventually get to everyone. Everyone ultimately will be required to report their transactions on this electronic invoicing. There will be provision for those that do not have even electronic accounting systems.
Okay, there's one from OK. Good day and thanks. Please, what happens if a holding company revenue is 5 billion, but the components are individually below the 5 billion threshold? Do the components need to register now?
Yes, you do, because that will still show in your books as turnover.
Okay. Before I go, I think we have some people raising their, but before I go, let me take this last one. Could you clarify whether the app's integration with the FIRS system relies on blockchain or a standard internet connection? If it uses the internet, how do we mitigate risk associated with weak or unstable connectivity? In addition, can e-invoicing transaction proceed offline, capturing data locally and synchronizing automatically once the network is restored?
Yes, it can capture locally and synchronize when the network is restored, and it requires the standard internet connection. However, the connection between the taxpayer and the access point provider, they can, get creative, innovate around that, use blockchain if they want to. However, between the access point provider and FIRS, we still use the PKI model, and it is pretty secure.
So,
Femi,
yeah.
maybe if I could just jump in on the question before the last that Mike
Okay.
answered. I'm not sure, just in case we didn't understand the question, it has to do with the holding company. And I think the person is asking, saying that the group's turnover is 5 million, while the components of the group are less than 5 billion individually. I think that's what the person is asking. And if that is it, just in case that is what the person means, it means that the components that are less than 5 billion are currently not obligated to register until they hit 5 billion. And also it means that even the holding company, except it is generating dividends from those components that make up to 5 billion, it may also not be required to register, because companies are going to continue to account on their individual turnover and not as a group. We still do not do group filing in Nigeria, so I don't think that that will apply. But Mike may just want to clarify, just in case that is what the question I mean.
Yeah, I mean, as in terms of the group holding, as far as it's recorded as part of your turnover, then that's the threshold we use. But if it's not, then the individual components, if it's less, then of course you would have to. It's not compulsory yet. However, we're not stopping anyone from onboarding. By the way, we're just saying, oh, this is the group that is now compulsory for. However, if a company, a taxpayer has less than that threshold of turnover and they wish to get started, I mean, they are very much welcome.
Yeah, I think that is very helpful. So, I mean, anybody can onboard voluntarily, but
yes,
compulsorily, you need to have a 5 billion naira annual turnover.
Yes.
Thank you very much for that clarification. So would give some of the participants who are raising their hands the opportunity to ask their questions. I'll start with Adetayo Adeboga. Tina, you want to give him access so he can speak? Adetayo,
Please
can you
unmute.
unmute?
You can speak now. Yeah.
Okay, I'm not sure it's there. Can we move to the next person, Paul Orok? Please speak, Paul. We can't hear you.
Hello, good afternoon.
Yeah, good afternoon.
Okay, to the Q&A group. I didn't lift my hands up, but my direct question was this: if the government through FIRS is actually the one seeking that we all come on board so that they have a seamless way of running their system, why are we, the taxpayers, being burdened with paying the cost of all those integrations?
Thank you. Femi, you may probably just take another one so that we are able to take as many and answer them at once rather than.
Okay.
And if we can also moderate the length of time anybody takes to make a comment.
Okay. So let's go to Robert. Can you quickly ask your question, maybe in 30 seconds? After Robert, then Bankole, Olumuyiwa, and finally Basit. In 30 seconds, please.
Okay, good afternoon. My question is that when the speaker was talking then, he said that if a company opted for accrual basis or the cash basis in terms of the e-invoicing. So my question actually has to do with in terms of remitting the fee, and a company is opting for accrual accounting basis, but when it has to do with until when a customer actually pays, that is when the VAT will be recognized. What is the position of the FRS in terms of this one?
Macaulay, can you please ask your question in 30 seconds? If you are speaking, we can't hear you. Okay, can we go to the next person, Olumuyiwa? Please enable Olumuyiwa and pass it.
Okay, thank you very much. I believe you can hear me.
Yes, please go ahead.
Okay, the first thing is that for B2B transaction, it means both the seller and the buyer of the goods or services will be integrated. What happens if I am a seller, I'm integrated, and the buyer is not integrated? How do we proceed? That's number one, or vice versa. Number two is that for system integrator rule, I believe a company can perform that SI function internally or directly via ERP provider or whoever you have nominated. Why for the approved providers, you have already published about 12 names of SI and APP. Now the question then is, can you provide the contact details, that's FIRS I mean, email, phone number, customer service details of these providers in order to more or less have interaction with them, if any? And also with respect to the charges, I believe that if government is trying to institute a technology for fiscalization, it should be at the expense of the government, which should constitute part of the cost of collection that FIRS currently enjoy, and not to belabor companies that are still struggling to incur, because some companies might be forced to go ERP, which they don't have before, and they'll still have to incur other costs. Why can't at least FIRS incur the cost for APP and not even saying that they are still considering it, because it's very critical. We should operate within a band of ease of doing business like we see in other parts of the world, so that it can make compliance easy, simple, and accessible to all. Thank you.
Okay, thank you. So the last person.
Let me just respond to that one and a couple of the other questions before we continue.
Okay, that's fine. Thank you.
So I'll just walk my way from the last question to the first one. So in terms of considering costs, there's so much we're looking at. We're looking at what's happening in other climates as well, and that is why we're trying to make it as seamless as possible for a taxpayer to comply. And if you look at it, we have started with the companies that have a turnover of 5 billion and above. We have not started with everybody yet. There's a reason for that. The cost of compliance, how much does the tax consultant charge a taxpayer to file their tax return? It's part of it. You already have a cost that you incur for complying with tax, right? So this is just a marginal increase to it. We tried the route of, like Sajid mentioned during his presentation, we did something called VAT automation, which FIRS paid for, right? And we said, we sent out service providers, go and integrate with the systems of taxpayers and, let this thing be reported to us at no cost to the taxpayer. But there was a whole lot of pushback. Oh, we have our people. We have the person that installed this thing for us. We trust that one and all of that. So we had to take a step back, take the feedback from there, review what's happening in other countries, and come to this, version of e-invoicing that is being offered today. So be rest assured that all those angles have been considered. And there's hardly any system in the world that all the users 100% agree with. So as it is, after considering all the different angles and all the different stakeholders' feedback, this is the version we've come up with. However, we're not cast in stone. We're still taking feedback and we're still agile and, we're responding to the needs of our taxpayers. So, we can still come up and say, hey, this is how we want to do this. going forward, depending on what we see as the majority position of taxpayers, right? So with regards to the contact details for the access point providers, that will be provided. The ones that have been published for now are those ones that have been cleared by NIDA. Remember, I said NIDA is a partner for this, and we don't just want service providers. That we don't want bad actors in this space or quacks, if you may. So we are getting NIDA to validate the capacity of the service providers before we publish them. So as more service providers are cleared, their names will be published accordingly, and their details will be made available to you. Now, if a seller is on the system and the buyer is not, would say focus on your own invoices that you're generating, not that of the buyer. It still makes it valid because FIRS would be aware that that transaction has occurred as your own end. Until the buyer is onboarded, it just means that that leg of the buyer receiving the invoice from you on the system will not be possible. But you will still be able to print those invoices and send to them on your system the way you do today. So like I said, this is not meant to interrupt or disrupt the way you do business. It is only meant to add value or enhance it. So if your system is made invoicing compliant, that doesn't mean you can't still print your invoice, right? And then with regards to the question on accrual versus cash, yes, if you practice accrual accounting and another person practices cash accounting, it's all there. You still file your tax returns as and when due. So this doesn't change that, right? The time you recognize value based on your accounting style is still what we want you to report. We're not saying this invoicing is not about you filing your tax returns. I can't stress that enough. It's just reporting the transactions for us to have data, right? And think about it, if we have data about your transactions, if you're flagged for whatever reason for an audit, we have this information already, rather than telling you to go and print out all the invoices you did in the last 10 years and things like that. So at the end of the day, it's actually more convenient for the taxpayer. And then talking about bearing the burden, I've spoken about that earlier. We've tried that approach before, and there was heavy pushback, and that's why we came to this model where we're saying, you know what, work with whoever built your system, who you're convenient with. Let the person just come, we'll get them certified as a system integrator, and they can go ahead and configure your system, right? And definitely, if you're already using a system, it will be a marginal cost to make it compliant than buying a new system. So if you're in the process of changing your system, or you want to change another your system to a different one for operational efficiency, that's a different conversation. Then it's not really the government, motivating for that. I think I've gone through the questions I have here.
All right, thank you very much. Sergey, you want to add in a minute?
So just quickly, to the gentleman that asked if the other person doesn't have a system, I think the invoicing platform also has a feature called self-build invoices. So in the situation whereby you're not sure if the third party or the person supplying you doesn't, provide you the needful, I think you should be able to generate a self-build invoice. So I think that conversation will be held with your system integrator to ensure that you have those features. And then as regards the accrual, to just add to what Mike said, so your SI2, I mean, again, this is why your system integrator should be experts in the system that you're using, and then of course should also understand the capabilities of the e-invoicing system. In a situation where you're doing accrual accounting, so you generate an invoice today, if you say it's cash, it means that until you register a payment, which is to go on the invoice and say, oh, the invoice has been paid, then that invoice is not reported to FIRS as closed. But if you say it's accrual, it means the moment that you confirm the invoice and say, yes, this invoice is accepted by both people, then the invoice is reported to FIRS. So that is going to be determined by the configuration in which your system integrator is going to configure, and you are the one that will give them that input. You can ask them to put the two options. We've done that before. Or you can tell them, oh, this is strictly accrual. We've also done that before. Thank you.
All right. The day has been fast spent. We promised to end this by 1 o'clock, and it's past 1 already. We know we still have quite a number of questions, and we'll compile that and we'll respond. All you need to do is to drop your email address, and your questions would take care of that. And on these notes, I want to thank all our speakers, for this insightful presentations, and to everyone who joined us today. We also want to thank you. We have covered a lot, right from the policy framework behind the FIRS initiative, as well as the technical steps for integration and the practical implications for businesses. But before we end the session, I would like to quickly recap some important points, one of which is the fact that the merchant buyer solution is now live and mandatory for qualifying transactions. Second is the fact that businesses must now ensure that their systems are integrated and compliant with the FIRS standard. And lastly, that input VAT claims and invoice validation will now rely on digitally authenticated records. So we will be sending out a recording of today's session and also links to the relevant resources. And we also want to say that if you have further questions or need support, please feel free to reach out to us at mc@crestinpedable.com. Also, I would like to say that we have a webinar coming up tomorrow on the new tax reform. We'll also be having that conversation same time tomorrow between 11 and 1 p.m. So once again, thank you for being part of this very important conversation, and do have a very lovely day ahead. Thank you.
Just before you go, Femi, if you don't mind,
Okay.
we also want to let all our clients who are on this call know that we are on standby for any further inquiries on this matter. As you can see, we are quite on board with the relevant people at FIRS, and also some of the resources like West Metro, like that you are going to need, and we will be happy to work with you to ensure that you are able to implement this as expected by FIRS. So you can reach out to any member of our team, and then we will see how we can partner with you to ensure a successful implementation within the time frame that has been granted by FIRS. Thank you again for joining us. Yeah.
Thank you.
Thank you.
Thank you.